You're listening to the Unlocking Africa podcast.
In those hard sciences that support building the foundations of society, including, but certainly not uniquely, centered on infrastructure, we're almost able to put a team on the pitch, as it were, that is predominantly African in mindset. This progress of the Lobito Corridor clearly illustrates what is possible when we manage to get cross-border political alignment, institutional coordination, and commercial structuring, and that all comes together. I'm sensing there is a growing understanding that in order to move forward, we can't keep doing what we used to do. We need to change things a bit, and the AU is well positioned to help us all manage that.
Stay tuned as we bring you inspiring people who are unlocking Africa's economic potential. You're listening to the Unlocking Africa podcast with your host, Tessa Adamu.
Welcome to another episode of the Unlocking Africa podcast, where we explore how we can unlock Africa's economic potential in the 21st century. Today, we're diving into one of the most important topics shaping Africa's economic future, which is infrastructure execution. Joining me is Thomas Kingombe, Managing Director and Partner at Boston Consulting Group in South Africa. Thomas is a leading voice on Africa's development agenda and a key contributor to BCG's latest report titled Bridging Africa's Infrastructure Execution Gap. The report highlights how Africa can accelerate 130 transnational projects across energy, transport, digital, and water, with the potential to unlock up to $6 billion in GDP value for every 1 billion invested. Welcome to the Unlocking Africa podcast, Thomas. How are you?
Thank you, Tresor. I'm very well, thank you. Enjoying a sunny day in Joburg, but looking forward to an exciting conversation.
Fantastic. So we're here to discuss the new report that you've released, which looks at bridging Africa's infrastructure execution. I was hoping we can just get straight into it. So, Thomas, let's start with the big picture. The report describes Africa's infrastructure opportunity as extraordinary and entirely achievable. What actually gives you that confidence that this time Africa can truly bridge the infrastructure execution gap?
Yeah, thanks for the question, and it's a good one. Maybe a couple of high-level things which we also highlight in the report. I would say, firstly, that the key solutions or the main solutions are actually known. We obviously have a financing gap, and so we need more innovative financing structures. That's one thing. Second thing is that we're not engaging enough. The private capital and private sector participation is too low. And then finally, the third big thing is cross-border coordination, which we have been struggling with for years. So these challenges have been well known, but what gives me confidence that we should be able to overcome them this time, although there's no miracle cures, I believe, is that not only have these issues been known for a while, but we've also seen examples of where we have managed successfully to overcome them. But most notably in this case, I would say the forwards expressed in our report, which are written by respectively the Honorable AU Commissioner for Infrastructure, Lerato Mataboge, and the equally Honorable CEO of Standard Bank, Sim Shabalala. They represent two of the most important actors in this space, namely the Union of African Nations as well as private capital. And so it gives me confidence that if we get those two stakeholder groups aligned and able to collaborate better than previously, then we stand a very good chance of finally making headwinds in this space.
One part of the report, or one theme in the report, which I found quite interesting, is that it challenges the legacy view that Africa's infrastructure ambitions are crumbling under execution failures. With that in mind, what would you say has changed in recent years that gives you confidence this time will be different?
Yeah, a number of things have changed, I think, both structurally as well as, let's call it in inverted commas, historically. And maybe if we just take a step back and look at the very big picture, and please, do excuse me for trying to expand a bit here, but African infrastructure is kind of personal to me. So when my dad was sent to Europe back in the day, the DRC had, I think, less than 40 university-educated Africans in the country. And so his generation was sent to Europe to be educated. And here we are 2 generations later. There is a large group of African diaspora and Africans in Africa, of course, who increasingly master the sciences and have advanced degrees in medicine, engineering, law, economics, business, and so on. So although many of us have been trained in European or American universities, where you could argue that we've been taught a bias towards colonial perspective on history, my read is that, in those hard sciences that support building the foundations of society, including, but certainly not uniquely centered on infrastructure in its broadest sense, we're almost able to put a team on the pitch, as it were, that is predominantly African in mindset and also based here. And so if you add to that we also have a demographic bulge, we are going to be the youngest continent very soon. And so there are going to be a lot of people asking for jobs. Those 2 structural elements gives me confidence that we are going to be, or we are just at the epic center of being able to manage this, which we have not really been able to before. And so I think there is a lot of opportunity knocking on the door, and I feel optimistic that Africa, with all its nuances and differences and multiple 54 countries, are at this inflection point. And as opposed to previously, we have enough skills. I think there is enough political will and determination, as well as maybe we need to be a little bit lucky. But with that, we can succeed. And I think that's going to be critical for us to mobilize all those resources in order to move us further along.
I guess if we look at some of the realities in terms of the tangible infrastructure projects on the continent, I know your team identified roughly 130 transnational projects which are ready for acceleration. With those projects, are you seeing specific sectors or regions being represented or also ready for investments?
Yeah, so there is a significant difference between the different types of sectors. If we use the funding gap, which is almost 100 billion US just for 2025, as a proxy for which sector is receiving the most investments and therefore is the most ready, that's clearly the energy sector. And whether that's renewables or more traditional energy projects, this sector is getting 75% of its funding needs accounted for or committed to in 2025, whereas the transport sector, conversely, is struggling with a funding gap of almost 80% of its needs. Of course, just because you have the prerequisite financing, that doesn't mean instant success. So Africa's path to energy access and just transition depends not just on generation, but also on interconnection, which is an interesting infrastructure challenge. So while new generation assets are coming online, many remain underutilized due to a lack of cross-border transmission infrastructure. And this illustrates a bit of the challenge here. So we've got these power interconnectors that enable countries to share surplus generation, that trade energy costs efficiently and stabilize national grids. So, to reduce outages and volatility. But we see several cross-border interconnections offer a glimpse of the potential that we are looking at. So we've got the Sisibona line, which is Zimbabwe, Zambia, Botswana, Namibia, which aims to reinforce the Southern African power pool and thus enable hydro and solar trade. And we've also got the West African power pool, which is gradually connecting Ghana, Cote d'Ivoire, Nigeria, and others, but which still faces regulatory and financing hurdles. So there's definitely, lights at the end of the tunnel, excuse the metaphor, but still lots of work to get done with regard to the different regions. I think we need to, I was about to say follow the money, but actually it's follow the people. So the regions that are most important are where the most people live, which is clearly West Africa and Eastern and Southern Africa.
So you highlighted the funding gap. So if we look at financing that transformation, I know you've pointed out Africa's $4 trillion in domestic capital from pension funds, insurance assets, and sovereign wealth funds. What practical steps do you think are needed to mobilize this domestic capital at scale? Yeah,
and maybe just to reiterate the fundamental nature of the funding gap that we're facing here as a continent. Unfortunately, a widening infrastructure funding gap, if you like. It's currently estimated at roughly $100 billion for energy, transport, water, and digital infrastructure just in 2025 alone. And the current key sources of funding are respectively the strained fiscus of the African nations themselves. They fund roughly 40%, 42% of this. We've got foreign states. China, for example, they fund an additional 24%, closely followed by other quote-unquote foreigners, including DFIs and multilateral banks, etc., with another 24%. And then we've got private African capital, which only constitutes 3% of the total funding, right? So this is, of course, an issue. But given that we have, as you said, $4 trillion in domestic capital, in pensions, etc., we need to clearly increase the private sector participation rate. And today, as said, most critically, private sector participation, that remains fundamentally minimal. In Asia, we've got closer to 15% participation from private funding. And so we believe that there is an opportunity to unlock this domestic capital by, let's call it, bold regulatory reforms, creating things like investment vehicles tailored to institutional preferences. That can be long duration inflation-linked instruments. It can be risk participation structures or diaspora bonds, and reforms that widen eligible infrastructure asset classes, harmonizing listing rules across exchanges, and developing credit enhancement mechanism. They will be essential to crowd in these pools of capital. And if we manage to mobilize this private capital effectively, or even just a smaller reallocation of our African capital markets, then we could actually outstrip the financing needs every year. And in a sense, if we do it well, transform the continent from kind of an aid recipient to an investment destination. But like I said, it demands a bit of bold regulatory reform. So we will be looking to our politicians to help us a bit and lean in.
As you mentioned, private sector participation is currently low. I think in Africa's major infrastructure projects stands at around 3%. And you mentioned compared to other emerging regions, it stands around 15%. But what would you say are the biggest barriers which are preventing private investors from participating? Is it just the regulatory issues, or is it far wider or deeper than that?
No, it's quite a bit deeper than that. So two main things. First, there is operational and commercial feasibility concerns, which are a key contributor to the inability to secure infrastructure funding. Operationally, projects face delays from land acquisition issues, regulatory fragmentation, and inadequate cross-border support, for example, tariff regulation, all of which increase risk and deter investment. So commercially inaccurate or outdated financial projections, such as unrealistic cost estimates, demand forecasts, or weak offtake agreements, they basically erode investor confidence. And so these challenges result in uncertainty around project completion and return on investment, which makes investors and funders hesitant. And so what we got to do is strengthen project preparation through kind of more robust modeling and essential bankability in order to really unlock transformative infrastructure development. And it is, to an extent, a skills gap where we don't currently on the continent have enough people that are able to fundamentally do some of the, if you like, basics, although some of the basics are quite advanced, to prepare projects to become bankable. And so we need to inject resources and skills into this gap.
You slightly touched on this, but from your experience, what models or mechanisms would you say have proven most effective in de-risking projects and making them a lot more attractive for financing?
Yeah, so there are actually several models and tools that support, let's call it, improved risk mitigation. For example, partial risk guarantees, multilateral investment guarantees, agency, which helps as well. There are multiple things that can kind of cover the viability gap, if you like, of the funding mechanisms. But in Africa, we've struggled to deploy them effectively and at scale. And therefore, many project sponsors are unaware or lack the technical expertise to structure these tools into financial packages. Others encounter, institutional resistance or legal bottlenecks when they are attempting to implement complex blended finance structures. And this means that in the end, we end up with a landscape dominated by projects that are either too risky for commercial finance or too reliant on an already constrained public sector resource. And so I believe that it's less actually about the tools and models to an extent. It's much more about something more fundamental. In reality, Africa actually has a lower historical default rate of around 2% than, for example, almost 7% in the US or even higher in South America. But this perception of high sovereign risk in Africa persists, which leads to even higher financing costs and tighter lending conditions. So without some form of innovative and unified effort to mobilize, structure, and de-risk financing, our infrastructure ambitions will remain stuck in feasibility studies and purgatory. So closing this gap, yes, it's about risk and mitigation, but it's also about trust. And we need to build that trust through more bankable projects, more transparent financial models, more effective partnerships across governments, DFIs, and private investors. And unless we are able to, through that trust building, create a vibrant and well-supported financing ecosystem, even the most strategically vital infrastructure projects, they will fail to move from concept to construction. And so we need to build trust, would be my one key word, with investors by showing our capability to deliver projects, both the decision-making elements in order to decide to do the projects, but then, of course, equally importantly, to deliver the underground work to make the project designs come to life.
So keeping on the theme of models and delivering projects, I know the Lobito corridor is one of the strongest case studies from the report. It shows how the copper shipment time was reduced from 25 to just 6 days. What key lessons from that model can be replicated across other regional projects?
Yeah, so maybe just a few words on what this project or program is, and which also showcases the enormity, I would say, of some of the projects that we have or programs we have going on the continent. So the Lobito corridor is a major trans-African logistics and infrastructure initiative connecting the port of Lobito in Angola to mining and industrial hubs in Zambia and the DRC. It spans 1,300 kilometers of rail and road infrastructure. It offers a strategic export route for critical minerals such as copper and cobalt from the Central African Copper Belt to global markets. Hence, it's a massive project, but despite this strategic value, the Lobito corridor has remained underutilized for more than a decade, hampered by multiple cross-border challenges. And just to mention a few, there's been an institutional void in terms of aligning standards and rules. There's been infrastructure bottlenecks and commercial uncertainty. But by solving these challenges, a couple of key learnings have emerged. Most notably, of course, that we, and by this I mean the African Union and other stakeholders, together with private investors, as well as local and regional entities, have actually overcome these challenges in this case, right? So that is the first key takeaway. And secondly, I would say there are 4 things that solve this specific program. There are 4 key things I would highlight. So there was a new corridor-level governance body, including a council of ministers and a professionally staffed secretariat, which was put in place in order to coordinate and hence solve one of these, let's call it, international challenges of regulation. Secondly, there was a harmonized set of operating standards across customs, axle loads, vehicle dimensions, and multi-entry visa systems and transit bonds that were put in place in order to reduce this border friction of moving people and goods amongst these different countries. The third thing was that a 30-year concession to run the Lobito Atlantic Railway Consortium enabled investment in rolling stock and signaling upgrades. So this was, if you like, sourcing in private investments. And then lastly, but certainly not leastly, there was a guaranteed offtake agreement with the mining companies to underpin the freight volumes and unlock financing. So these 4 things meant that within 2 years, rail transit times, as you said, for copper shipments dropped from 25 to 6 days. Freight rates fell below road transport alternatives, which increased competitiveness, and the corridor has attracted more than $500 million US in blended finance, backed by development banks and commercial lenders. So this progress of the Lobito corridor clearly illustrates what is possible when we manage to get cross-border political alignment institutional coordination and commercial structuring, and that all comes together. And so it can act as a model for how we can do other similarly complex large infrastructure projects and execute them through an accelerated purpose-built coordination mechanism, especially for these high-impact multi-country projects. So this gives me comfort that we know what to do and we have shown it can be done. But like you said, initially there's 129 other projects which are equally complex and demand similar types of effort.
This is Verto Corner, where smart growth meets global scale. Today, we're exploring how strategic partnerships power cross-border success and why trust is the real differentiator. Here's Chris Morris, Partnership Manager at Verto, to give us a bit more information. Over to you, Chris.
No problem. How we think about partnerships as Verto is ultimately it's a go-to-market channel for the business. My role has been to come in and really look at how we can set up partnerships as a growth lever for Verto. So I look at partnerships both from a commercial and an integration perspective or product perspective. And our role is really to drive value for the business, Verto, drive value for our partners, and then ultimately drive value for customers. And the outcome of that, we feel, is how do we drive the vision of Verto forward, which is to enable emerging market payments and banking and to be the leader in that space in Africa and the Middle East, specifically to the rest of the world. And if we're successful, we will create a lot of value.
Thank you for that, Chris. Just to go a bit deeper into what you've mentioned, I wanted to see if we could explore further in terms of how does Verto's partnership model support clients specifically across global markets?
Sure, it's a great question because I think at the core of all of this is delivering client value. Again, as I said, the way we think about partners is finding those businesses and those networks where we can work together to either solve a specific client's problem, unlock value, deliver innovation to new verticals, and really drive the agenda of Verto forward, which is to unlock cross-border payments and banking in emerging markets. I can give you an example. We have a partner that we've recently worked with where it was a new vertical for us in many senses, the travel business and travel platform in East Africa, which is Tripoli. And what they were struggling with was offering their agencies and their customers the ability to set up global accounts, multi-currency accounts, so that they could accept international payments, manage those funds internationally, and ultimately serve their booking business. In addition, they were looking for payment rails, so they could pay in local currency, collect in local currency, pay out, and then even pay out in hard currency. And through our new Atlas platform, which is basically our suite of API products, we've been able to partner with a collaborator like Tripoli, where we can embed and ultimately power their infrastructure so that downstream of the platform that they've built and that they're scaling very quickly, they don't even have to think about the cross-border elements. They just know that from a trust perspective, Verto is there, and we can enable their full cross-border and multi-currency suites of products for their businesses, which you can imagine for a travel business is core to their operations, core to how money moves. What we uncovered was that there's a broken chain, a broken system within this space. And that's just obviously one of the verticals that we're working on. But by partnering with someone like Tripoli, we're not going to go and sign up hundreds and thousands of agencies. That's not really our game. We could do it, but by working with Tripoli, they are specialists in offering that booking experience and that platform. So I think it's those types of opportunities which we look for where we're unlocking real customer value. And through that, there's mutual value for our partners and ourselves. I always kind of call it a win-win-win scenario. So that ultimately the customer's winning, we're winning, and the partner's winning as well.
Fantastic. You shared a great example where a partnership directly added value. So if we look at the type of partnerships you've created, what do you look for specifically when choosing partners that add value to the services or the products Verto offers?
Yeah, so it's a little bit more scientific than you might think. I always say it's a bit of science, a bit of magic, but we start with, as you would if you're building any kind of direct go-to-market channel, trying to get a view of what your ideal partner is. And then I think ultimately what comes down to is what is the problem that we're solving for that partner? And then what is the problem that we're solving together for the shared customer that we're ultimately going to serve? So that's kind of how we think about identifying partners and going after them. I think maybe one thing to add is there's also a partner type that we distinguish between. So we look at pure commercial partners. That is our referral partner program, which we're building out. So if you're an independent broker or you're a global tax business, a global trade advisory business, and you have a pool of customers that you need to service, you can come our way, or we work together and we say to you, we'll give you some sort of incentive revenue share based on the businesses that you introduce to us. And there's a purely commercial relationship, and there's a handover between your customer and ultimately our prospect. And then separately, we have product or integrated partners. And that's where, going back to what I mentioned, our Atlas products, we're looking at not only financial institutions, but platforms globally that have a focus on Africa and the Middle East, where we can embed our infrastructure, partner with them to enable these kind of nascent experiences and service their customers in a way that they need to.
Thanks to Chris Morris for highlighting the power of partnerships in cross-border success. If you're looking to scale globally through strategic collaboration, check the show notes for more on how Verto builds trusted relationships. Catch you next time on Verto Corner. And now back to our interview. I think it's clear that strong coordination, governance, and institutional innovation is required for the success of such projects. In line with this, the report proposes a new African Union coordination hub to accelerate multi-country projects. How do you think this hub will differ from past attempts to centralize coordination at the continental level?
Yeah, so like I just mentioned with the Libido corridor, I see this hub's primary function to work as let's say, an orchestrator, ensuring that perhaps firstly and most importantly, to help crowd in not just private capital, but also skills, which in the end, two of the main components of success. The third one being, of course, regulatory environment. The private sector remains, significantly underutilized, as we discussed, in African infrastructure development, despite its potential for capital and critical delivery capabilities, operational know-how, technological innovation, etc. Just as an example, in other emerging regions, we talked about this structured effort to attract private investment through robust PPP frameworks and transparent procurement pipelines and targeted de-risking tools. And that has helped push this participation rate to more than 15% in certain emerging regions. But for us to achieve that benchmark, we would need to do a five-fold increase in the private capital mobilized, which means unlocking billions in new investments without having to strain our public balance sheets. So private sector participation for me is a key element that this hub would help facilitate the beginning of or the acceleration of. So this means engineering firms, logistics operators, infrastructure developers, technological companies that can accelerate execution by injecting, delivery discipline and project preparation expertise. Also enhancing cost estimation, construction scheduling, and governance practices, where, if we're honest, public delivery mechanisms often struggle. So we need this hub to help facilitate the access and the collaboration with the private sector, but simultaneously, of course, to coordinate the discussions and function as a coordinating mechanisms between the different countries who all have, understandably, their own natural, or I should say national interests in let's say, furthering their inhabitants' interests, maybe at the expense of their neighboring countries, right? And somebody needs to kind of take a national perspective to say, how do we benefit the most people, regardless of which side of the potential border they live on? So that's the thinking around this hub. And of course, you need some muscle in that and a somewhat neutral owner. And here the AU is very well placed.
I'm glad that you've mentioned that, because we know that Africa has many overlapping regional bodies such as ECOWAS, SADC. So how do you see these regional communities working alongside this hub to avoid duplication and also to ensure projects align with both the national and regional priorities?
Yeah, that's a borderline a trick question because you are absolutely right. And one of the key challenges is, of course, just to remind all of us what Africa is. We talk about it like it's, Switzerland, but it's 54 nations spanning a geographical space which dwarfs the US, Western Europe, and China combined. So it's not, a little thing. And infrastructure, physical infrastructure is, of course, therefore extremely complex. And in most cases, it spans multiple countries. And this, of course, means that you span multiple political and legal jurisdictions, which is therefore delayed by, fragmented regulatory frameworks, divergent technical standards. A classic one is, of course, that, former French colonies, they have one railway gauge size, and former British colonies, they have another one. So, who is to change the distance between the railway tracks in their country when we want to do a cross-border railway, which would benefit both sides, by the way. Those are some of the, low practical challenges that we are facing. And so establishing cross-border coordination mechanisms is essential to accelerate delivery, which means that we somehow need to figure out how do we harmonize legal and regulatory protocols? How do we align tariffs and wheeling agreements when we're talking about energy? How do we fast track treaty negotiations and ratification processes? And what gives me a bit of comfort is that we've managed to do that. I say we, but Africans have managed to do that in the Libido corridor, as we discussed before, aligning some of these rules of the game, or in other words, the regulatory frameworks, and the governments around the corridor also the benefit of having this become their corridor rather than one particular country's corridor. And so we need a coordinating mechanism. And I think historic inability to do that well should give us the impetus then in future to agree and compromise, which is, of course, in the end, what's necessary for choosing somebody. And I wouldn't say anybody, but the AU seems pretty well positioned, not least given its name, to become this facilitator and coordinator and helping everybody understand that unless we bend towards each other and compromise, regulatory speaking, we are not going to succeed as a collective. And we do live next to each other, right? We've got multiple countries that are landlocked completely. They need their neighbors to help them get products to market. So I think the fact that we've taken a long time to get here is what it is. I'm sensing there is a growing understanding that in order to move forward, we can't keep doing what we used to do. We need to change things a bit. And the AU is well positioned to help us all manage that.
Thank you for sharing that. You touched on the mechanisms that can ensure accountability and transparency in project delivery across borders. But if we look beyond the physical, the report mentions the need for 5 million additional infrastructure professionals, such as engineers and technicians. What kind of skills, initiatives, or partnerships do you think could help close this skills gap?
Yeah, that's not an easy one either. We like big problems here, it seems. But let me give you an example. So the AU has already established a skills initiative for Africa called CIFA, in partnership with Order NEPAD and the German Development Agency. And these efforts mark a promising step towards kind of systematic capability building. However, like you said, we need fundamentally 5 million additional professionals, right? So it's not like training even 30,000 is going to cover that gap. And so scaling the impact of such initiatives will require even deeper coordination with project pipelines. So one thing is we need hundreds of thousands of more engineers, but we don't need them. Well, we need them in specific countries to begin with, so to speak. And so we need to look at those 130 projects where the engineers are needed on the ground, and the workforce in terms of artisans and surveyors and what have you, so that the workforce forecasting at regional level is aligned with the effort to train the people. And therefore, we need to make sure that we have a stronger coordination of the training capabilities in the different nations with some of these needs. And so you can say, again, it's not an insurmountable challenge or problem in the terms of knowing what to do. It's getting it done, coordinating across maybe not all 54 countries at a time, but smaller groups of 3, 4, 5, and harmonizing training methodologies, accepting that an engineer trained in Ghana can also work in Nigeria, or one trained in Zimbabwe can also work in South Africa, et cetera, et cetera. And so these are the challenges, right? It's in essence more of a coordination challenge, because lest we forget, we have in most countries, I'm now in South Africa, a fairly high level of unemployment. Now, most of those unemployed are not engineers, doctors, lawyers, and so on. But we have a lot of people that could work on infrastructure projects as laborers, as technicians, as all sorts. But we need to train many, many more. And given the fiscal challenges in most countries, training people for unemployment is not a great way. So there are indications that this could happen, but again, we need very, very strong coordination across.
It's clear that closing this skills gap has huge economic and strategic impact. It also builds regional self-reliance. So how can improved infrastructure reshape Africa's trade patterns and also economic outlook? Yeah,
so you could say, and I would argue, of course, I'm an engineer, so I might be marginally biased, and a civil one at that. But infrastructure is the foundation for trading societies. Currently, we have 600 million Africans that lack access to electricity. The sub-Saharan Africa's electrification rate is 51%, far behind North Africa's, which has almost near universal coverage. Transport infrastructure is similarly underdeveloped. Half the continent's roads are unpaved. Fewer than 10% of our airports meet IATA ground safety standards. And if you talk about digital infrastructure, critical enabler of inclusive growth, it's nascent. Our internet penetration stands at 27%. Our data center capacity is below 1 megawatt per million people, compared to global benchmark of somewhere between 30 and 90 megawatt. So these gaps are stalling our economic transformation. And so if we don't have paved roads, our trucks will take twice as long to get from A to B. Add to that the fact that our distances are typically much, much larger than in other regions, Europe, US, Asia for that matter. And so we simply, to facilitate economic growth, we need infrastructure to function at a much higher level than it currently is. The positive spin on that, of course, is you can use infrastructure development as a catalyst for economic development. So by employing, US in the 1930s coming out of the Depression, massively upscaling infrastructure investments and building their current highway network in order to employ millions of people to help with that. Something similar ideally could take place here. It's more complicated. We're not one country. We have all these regulatory and historic challenges which we will need to overcome. So I'm not saying just because somebody else did it, we can also do it. But it is a fact that investment in infrastructure instigates subsequent ripple effects in the economy. One-to-one, you employ some people building roads, you facilitate trade, you facilitate reduction in transport costs, and you employ people that can spend money in your economy. And so it's self-fulfilling prophecy that if we succeed here, it will have very, very positive ripple effects going forward.
You touched on something quite key and something which I am a huge advocate of, which is the need to create jobs at scale, which can only be achieved through mass industrialization and infrastructure development. So from your perspective and the analysis you've done, what type of jobs do you think could be created through this process, and how can we also ensure that they are accessible to Africans?
Yeah, so this is on the one hand, easy, right? The jobs that are obvious are kind of, tons of civil engineers, surveyors, truck drivers, laborers, call it technical construction skills. So that's the obvious ones. They will help, quote unquote, build the roads and some of the energy infrastructure, which will then feed energy into our factories. And then subsequently, you'll need factory workers and laborers. But the downstream effects of this is, of course, that you will allow more money to be recirculated into your economy, which should open up the opportunity for other positive effects. The challenge will be to manage this political balance, I would say, between where those flows of money goes in order to accommodate the interests of the African nations, where we have a lot of youth unemployment, we have a lot of female unemployment, and in the end, to a large extent, skills and employment go hand in hand. So how do we balance building skills for the right people and utilizing those skills while securing that we don't leave somebody standing behind on the platform as the train leaves the station? That is a little bit of a different challenge, which we have not addressed here, but it's clearly one of the things where political intervention is going to be key in order for this not to kind of just follow the money and benefit, let's say, a smaller part of society than it otherwise could have. That is, to me, a key element of a political nature which our report doesn't address, but it is clearly going to be a challenge.
You mentioned something that's quite important there, which is the political intervention is key, and political intervention across borders is definitely key to that. I know the report also calls for stronger regulatory harmonization across borders. So from the work that you've done, are there specific examples where this has worked well in the past or currently?
Yes. So we mentioned the Lobito Corridor, but I think East Africa's progress on trade facilitation also offers proof of what aligned cross-border governance can deliver. So they have made measures such as like one-stop border posts. They've harmonized customs systems. They've standardized documentation. And therefore, the East African community, which consists of 6 or 7 nations from memory, they have significantly reduced trade frictions. And I think it might be worth thinking about that in terms of our conversation has been about Africa, which to a large extent really is sub-Saharan Africa. But reality is that even sub-Saharan Africa is such a large place that it's almost meaningless to talk about it in one expression, because it's so different from, Mauritania to South Africa or Madagascar. And so this regional example here of East Africa, the East African community, highlights how important it is that we in SADC, so Southern Africa or Western Africa, think regionally, because nationally is too small, but perhaps, let's say, at African level, it's too big. We need to kind of eat the elephant in chunks, as it were, and think in regions. And then we can maybe discuss later on, should the regions also harmonize? Because if we try to harmonize all of sub-Saharan Africa in one go, it's just going to be too much.
I agree. And finally, as we come to the end of today's conversation and as we wrap up, if you could send one message to Africa's policymakers and investors listening today, what would it be, about seizing Africa's infrastructure moment and also turning this potential that we always hear about into actual realities and performance?
Yeah, I think I'm going to have to resort to the classical Latin carpe diem, as you say. We're the youngest continent on the planet in terms of demographics, at least. We're arguably the older in terms of origin, but we need to prepare a better future for our kids, a much better one than the one most of us have experienced. And it's within our ability to do so, as long as we put our shoulders to the proverbial wheel, all of us together, trying to push in the same direction. So I would ask them to help coordinate us so that we do this.
Quote of the week.
As people, we often have quotes, mantras, African proverbs, or affirmations that keep us going when times are challenging or when times are good. Do you have one that you can share with us today?
Yeah, in listening to some of your other podcasts, I realized that I was going to get this question, so I thought about it a bit. And I would highlight, the Kikuyu or a Kenyan proverb, which states that when elephants fight, it's the grass that suffers.
Yeah.
So I think it's a good reminder for all of us, those of us with resources, skills, power, and agency, to stop fighting and start living the Bantu spirit of Ubuntu, not just in words and with our closest, but also at a societal and even, if you like, an we talked about regional, but of course also intracontinental level, across all of Africa and then even beyond. But I think that to me is important to maybe keep in mind.
And that is a fantastic note to end today's conversation. It's been an absolute pleasure, Thomas, and thank you so much for joining us today and sharing such valuable knowledge, experience, and insights from the report. It's clear that Africa has both the ambition and the building blocks, and now it's probably about coordination, investment, and also execution. It's been a pleasure reading the report, and I would recommend it to anyone who's listening to grab it, take some time going through the finer details and understanding the value and the positioning of the report.
Thank you very much, Teresa. It was a pleasure to participate, and let's build back much better.
Thank you to everyone who has listened and stayed tuned to the podcast. If you've enjoyed this episode, please subscribe, share, or tell a friend about it. You can also rate, review us in Apple Podcasts or wherever you download your podcast. Thank you, and see you next week for the Unlocking Africa podcast.